Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We are back. Enjoyed our nice long weekend out in New York at the Benzinga Trading Summit, and a lot to get to on today's show. We're going to talk about the huge sell imbalances at Friday's close. We're going to talk about Caesars finally getting taken out by El Dorado. We'll talk about Facebook and the Slack IPO, and we'll recap some of the biggest ratings from the morning. And our guest today, Evan Schnidman, the founder and CEO of Prattle, and he'll be able to break down for us the latest in Fed speak. That'll be at 8:35. In the meantime, Joel, what's the word here in the overnight S&Ps?
You got me unmuted? All right. Back here in the Motor City after a great trip to the Big Apple here. And as always, we got some green on the screen here. S&P futures after that week closed, bottomed at Friday's low, 47 and a quarter. Friday's after hours low, 47.75. That's your level to keep an eye on the downside. On the upside, we got to 61.75. That's just above your high close for the move here at 29.60. So there's your next target. All-time high made on Friday at 69.75. Crude, powerful rally here, up 40 cents at 57.83. Gold clears 1,400, up 11.60 at 14.1170. Silver up 6 cents at $15.35. And the only financial channel in the world that did not give up on Bitcoin is PreMarket Prep. Futures.
I don't know about that, but
well, at least we continue.
Where is it? Where is it?
The futures.
I'm trying to talk still. I'm still lost my voice. What's up?
The futures are at 11,000, up 10.
Yeah.
You know, you can't.
Weekend, right?
Weekend. It's right. The old
Every
Saturday
weekend has a huge rally.
Yep.
That's
yep.
why the nice will play. This thing goes up it seems like every big move is always on the weekend. I want to see a paper on this. I'm telling you, potential if you're doing a master's or if you're doing any type of paper here, or even a thesis, let's do this one. Bitcoin, why does it go up so much on the weekends? I can speculate, but I'm not going to say it.
Yeah, we've talked about it several times before. But Triple D, how were your travels back to Canada?
Travels were fine. No flight delays. Travels into the Big Apple were delayed because of fog there on the Wednesday night, but no problems coming home. You?
I had a little bit of a delay at LaGuardia, but I'm telling you, for as packed as that place was, because they're doing all the construction, it went real smoothly. It really did. It really did. So I got back a little bit later on Friday, but man, rest, relax, raring to go. And man, we got a lot of news here. Dennis, have you been able to survey that sell-off on Friday, or do you you don't even care? You weren't
off
here.
The grid.
You're off the grid
for 3 days. It's rare for me to do that, but off the grid for 3 days. So please inform me, everyone, of all the trading that I missed. I know, obviously, I'm checking into the prices and stuff, but it's weird. I mean, to not, be sitting at your terminal, sitting at all your screens, getting all the feel. Like, I even thought, from Thursday, okay, well, being, on the pre-market prep show, I was like, I could do a few trades from here, but then you start placing them, you're like, man, I feel so uninformed, though, because I've got all my systems. It's so hard to trade in a different environment. You trade with what you're used to, and you're doing this and doing that, and it doesn't feel right.
Right. So
I'm back in the saddle. I will be trading full here, obviously, today and going forward here. But give me the thought. What was happening here?
Okay. Well, we made an all-time high on Friday at 69.75, and then we were tapering off, during the day, a little bit, and then going into the close here, just to give you a perspective, at 3:45. The S&P future. Oh no, that's today. Let me go back longer term on my chart. Basically, we had a sell-off at 15:45. We were at 29.62, and by 1700, we lost 14 handles between 3:45 and the shutdown of the SPOOs at 5. we lost 14 handles in 1 hour and 15 minutes.
Yeah, and obviously that was an option expiration, which I'm disappointed that I missed, but I took what off. I don't think I've missed an option expiration in a decade. So I did hear that there was some movement there on the close, assuming that's probably what, the movement was in your S&Ps as well, as institutions may have had some big sell orders coming into the close. Again, I was not there, so I'm speculating as to what happened. But usually when you see the S&P sell off on a big option expiration day, it's in all likelihood due to the stocks having some pretty good pressure at the close.
Yeah, and there's a couple things here. I mean, we are coming up on the end of the month, what happens to be the end of the quarter, right? The end of the second quarter. So you'll see some jockeying for position here in portfolios.
Coming into the fourth Friday here too, remember. So that is going to be your Russell rebalance here. So that's always fireworks. So we're coming into that 5 more days. Maybe we'll do a little preview Thursday, talk about, what's going on into it. The strategies into it have always been wild the last few years. It's not a slam dunk. A lot of people think you just buy the ads, sell the deletes, and collect the money on the Friday. And it hasn't been the case the last 3 or 4 years. The trades get crowded. They go the other way. There's so many other variables going on there now. But, we can jump into that maybe Wednesday or Thursday for a little more detail. But we got lots of other stuff to talk about here this morning, including a little bit of Merger Monday.
Yeah, let's talk. Let's talk about the Ceasars and Eldorado finally coming to fruition here. Spencer, you want to give the details? And folks, they want to know what Triple D is doing with his position.
Yeah, finally, this one has been in the works here for weeks, for months, but Eldorado is going to acquire Caesars Entertainment for $8.50 a share in cash, plus some stock, and the ratio is 0.0899 shares of Eldorado common stock plus the $8.50 price. So $8.50 in cash plus a ratio of 0.0899 a share in stock.
So if you go ERI and you take the current price, remember you can't take the closing price. You got to basically take the current price because the stock is trading down 7%. The acquirer again getting hit, which was very surprising to me before. Just to go on a tangent here, when the ERI CZR rumors started, you had ERI getting a nice bid off it. And I was like, why are they doing that? Why are they bidding up the potential acquirer? And, even into this deal, ERI had been getting bid up into the deal. So it was kind of weird. Now their deal's official. Now they hit it. So I was long Caesars because this has been in play here for a long time. We've talked about it. And I thought eventually there might be a deal here to be had. And there is. A little disappointed because I see 12.75 and I see the stock here at 11.22 here this morning. So not, great. If we do the quick ratio and go to 0.08, and forgive my voice, like I said, I lost it on Thursday. It's never come back. 0.0899 times the ER current price of 47.25, let's just say. That's about where we were trading. You get $4.24. Then you add on the 850. If I'm doing that right, and I haven't looked at all the details, then you do get 12.75 actually, which is coincidental because I thought they were saying the price was 12.75 originally based on the old price. Is this ERI they're getting, or are they getting shares in the new company?
Oh, good question.
They're
getting shares of ERI.
Okay, so if they're getting actual shares of ERI, then it's trading at a significant discount here, 11.25 to 12.75. Before I sell my shares, which I'll obviously usually when you get a merger, usually I ring the register and don't participate with the rest of the risk arbs. I got to just dig into a little more detail here and see why it's trading with $1.50 discount there. If that this is the case, it's over a 10% discount, which is significant. I mean, you could say there's some antitrust issues potentially here, but Caesars, it's a pretty small deal.
On that topic, Dennis, I'm glad you brought that up. Eldorado is also selling the land of 3 casino properties this morning to VC properties for $3.2 billion. So they're offloading some properties today as they bring on Caesars.
Okay, I'm going to dig a little bit more. Like I said, I've been off the grid for 4 days. Before I just ring the register at 11.25, I'm going to dig a little bit more and just make sure that I'm not giving up a 12% discount for real with no risk involved. So obviously, if the deal is all cash, it's a lot different story for Caesars here. But there is a stock equivalent. It looks like it's going to be trading with ERI trading down. If Spencer Israel is giving me that correct ratio, Obviously that's going to knock it down a little bit here. So
just want to add one thing here. Jimmy Vegas in the chat says they are basing the ERI price from a 30-day VWAP from May 23rd. So I've never heard of that before. I'm not sure where he got that information, Dennis, but if you want to look into that too while figuring your calculations, sounds pretty complicated to me, but you got yourself in, you can get yourself out. Let's look at the other casinos and see how they're trading. Win, a stock that got beat up, trading up 275. You think there'll be much of an effect here? Win would be
the thing is, this is not out of the blue. I mean, I was in Caesars because this has been in play for a while. This deal has been rumored forever. Carl Icahn has been pushing for this deal. We knew ERI was going to be the potential suitor if a deal did come to fruition. So this is not unexpected. It's not like, whoa, where did this come from? Everybody is involved. So I just don't think you're going to have huge moves in the casinos because I don't think this is out of the blue at all.
Okay. All right. And then there's another smaller merger I think you mentioned, Spencer.
No, right. Del Frisco getting taken out this morning. DF, what is it now?
RG.
Yeah, thank you. DFRG getting taken out, private equity for $8 a share.
And that's a cash deal because this is $7.91. So there's your time value of money just with the discount the risk herbs are giving of 9 cents. So basically 1%. So you can see the difference. Obviously, if Caesars was all cash, it'd be trading up a lot more here right now, but that's not the case.
And Frisco, I have no idea what kind of restaurants they own. Do you know it off the cuff, or really no one really cares? Is there restaurant?
No, I don't. I don't know.
I don't follow stock at all.
Don't know, nor do I particularly care.
Okay. All right. So what else we got for news?
Well, then let's move over and talk. This morning, Bristol Myers, it looks like, has a trial that didn't meet primary endpoint here. BMY trading down $2 in the pre-market. Obviously, Celgene trading down here as well because it follows the Bristol Myers price with the deal still on the table. What happened with BMY? Obviously, this is a big disappointment.
Yeah, this is Opdiva, and it did not reach its primary endpoint. Bristol Myers also announced plans to sell a drug to ease FCC concerns as they go through with their acquisition of Celgene. So if you're following the Bristol Myers Celgene story, they got a good headline this morning. But the failure to meet primary endpoint of Opdiva, that's going to be a driver right now.
It doesn't seem like this stock wants to hold a rally, Dennis. It seems like it's the reason I don't own it. I mean, this stock has been a perennial it's you look at what Big Pharma has done.
There you go.
Merck is sitting up there, and had a significant rally over the last few years. Like, let's just go out. Let's put it in perspective. Go to the weeklies. I mean, Merck, even in the last year, has went from 55 to 85. You've got Eli Lilly going from $80 to roughly 115 here now. You can look at Abbott Labs. Abbott Labs just continues to fly. I own this in my long-term portfolio. It's went from $55 up to $85. Huge. Then you bring up Bristol Myers, and you're sitting there, and it's went from 65 down to 49. I mean, in the same time period, it's lost 15%, where pretty much every other pharma stock is up. So, yeah, you can say, okay, well, maybe it's to do with the merger with Celgene, that put it, but it was going down even before that. So, you just look at it, and you think it's just, been the, you think of best of breed, worst of breed. Bristol Myers continues to be, out of the big pharma, the worst of breed. So it's getting hit here again now. It just, whenever it seems like it looks like it's going to start showing some life, it seems like they have more bad news or they have something that happens. So I don't know. Until this can get above $50, and, obviously we're going the other way here today, it's hard to really get interested in it because the relative strength just been very poor.
You were in it at one time, though, weren't you?
In the long-term portfolio? Like, I've traded it. I don't remember owning it in my life. I was in Celgene, Joel. I was in Celgene, got taken out.
Okay.
So Bristol Myers, I can obviously, I obviously trade the stock,
right. Okay.
And we trade it sometimes. I don't remember ever owning this one in my long-term portfolio. Maybe I did. Maybe I did for a bit. I don't really remember it though, so I don't think it's a big position. Or I didn't obviously make her lose a lot of money.
All right. You got one green candle after hitting 46.93. So you got your pre-market support at 46.93. On the dailies, you got a little bit there. You got a 46.90 low here on June 12th. So looking at this, looking at getting it hit, being down a couple bucks, I think it's just important to hold that pre-market low at 46.90. If not, trapdoor opens down to 46 bucks. Those were your next two daily lows. On any kind of a rebound here, what do you need? To get to the bottom of yesterday's range, you got less than a buck to go. So if you're hoping to wiggle out of this thing in a gap, get your offers out there at or around 48.19. So there's your early trading range in BMY. 47 on the downside is support. Minor resistance at the gap fill at 48.19.
Celgene just following the price to Bristol Myers, obviously,
Correct.
because of the deal. So Bristol Myers or Celgene's trading down $4 here this morning too at 95.20. So it's got to trade. If you put those two charts on top of each other, I mean, they look virtually identical, at least for the last little while. So the only thing that changes those charts is when you get information or news potential to that deal in itself. So Celgene down this morning just because Bristol Myers is down. Lots of ratings, lots of other news here. Let's go to Beyond Meat. We haven't covered it since Thursday because we didn't do a show on Friday for the first time in years. But Beyond Meat is trading down here in the pre-market. I said on the show on Thursday that I thought the rallies were a fade. Looks like I was correct there because it was straight up at 175, and I was saying that it's been straight down for the last 2 days. I mean, I just think that was it. I think that was, upside capitulation, the blow off top when it went above $200. Originally when I was saying, I said that this thing could eventually get to 200. It got there, but it was fading so quickly there, and it was like on buy-ins. There was, just a lot of, reasons to think that that was the top. So until this thing has new fundamental news or starts to show some life or stops going down, it's hard to get interested. So, and here it's down another $3 here this morning.
Also, at the end of last week, don't have all the information on it, but I think a consumer advocate group came out and was looking at some of the ingredients in it. So I think that was something at the end of last week.
Also on Friday, the Shake Shack CEO said they have no intention of adding Beyond Meat burgers to their restaurants.
And the only other fundamental news I have is that Lisa went to Trader Joe's yesterday and they were sold out.
They're sold out of these everywhere. I mean, the buzz is still going, so that's the one thing. But you just wonder when the dust settles. I mean, there's, they're not the first that's going to create a P burger here. There's all kinds of, other competition already out there, and there's going to be more competition coming. So to come in here and say, okay, I think this Beyond Meat is for real, and I'm going to put this in my long-term portfolio and forget about it, I believe it's a mistake. I think in the long run, and we've said this the whole time, even when we were long, for a little bit there, because we were just riding, the wave. We were saying, I think when the dust settles 6 months from now, this is under $100. I still think that. I obviously think that probably the time frame for that move is a lot less than 6 months. I think when you look at it 3 months from now, it's under $100. But we don't know the path for it to get there. But it just looks to me like that was the blow off top. That's why I still think rallies are to be sold in BYND.
Who told me at the summit that they had an Impossible Burger? Was that you, Spencer?
That's a different company.
No, I know, but we're just talking about competition coming in.
Yeah, well, Impossible, I don't know which came out first. From what I understand, Impossible is more of the restaurant supplier. Beyond Meat is more of the grocery store supplier.
Okay.
That's how I understand the difference. But they're, to your point, they are basically the same product. I don't know if I could tell the difference between an Impossible Burger and a Beyond Meat burger. So.
Well, and the competition's coming. I was in the grocery store yesterday, and sometimes they get those little stands where you're trying different meats. There was another, vegan burger there. So I was trying. I was like, tastes kind of like a Beyond Meat burger. Kind of tastes the same thing. So, I mean, I don't know. The buzz is on this thing still. It's what's kept it up. But the buzz is going to start fading here, I think.
All right, we since we're on IPOs here, we missed the trading action in Slack, and did not. I mean, it had a good day from the IPO price. I keep putting Slack in there, but good symbol work. 2 days of trading in this one, and you hit your high on the first day at 42. you're trading at 37.22, I would focus on that all-time closing high of 38.62, but kind of a tight range for an IPO the first day. And then sold off a little bit, but so far no big fireworks yet here in work.
2 days of data, so hard to call something like this. Random walk theory for me. I don't trade anything usually the first few days of trading. I just don't have enough information. If I see something, maybe it forms a little double bottom from the day before or something, that's where it gets interesting. We haven't seen the last 2 candles from the first 2 days, have nothing in common with each other really, besides, it went red and the range was somewhat similar. But so if you look at that, I think it's gonna be similar ranges. I guess, you're looking at a 4-point range, but I'll tell you, if I was thinking I'm going to get bullish here, you want to see Friday's low at 36.60 hold. Challenging that in the pre-market. Takes that out, can go anywhere. So I think that's the first level. Does it hold 36.60? I mean, if you're trying it, that's what you want to see it hold. If you're buying at 36.71, which it's trading at right now, that person probably thinks 36.60 is going to hold. If it takes it out and starts going 36.50, 40, 30, well, we haven't seen the low yet. So I like to have a couple days before I really start to think, okay, well, now there's a tradable bottom here.
Yeah, volume tapered off from the first day, 137 million down to 42 million. So that's really no big deal. If you want to try and figure resistance, you've had not quite a 6-point range. Let's call it a 5-point range. So add 2.5 to 36.60, 7.60, 8.60. Let's look at 39.25, 39.5 as potential resistance today in work. But you know what? We use Slack at Benzinga, and and I also use it with Jeremy Newsom in Real Life Trading. So I'm a user of it. So
yeah, we're users of it.
While we're on the topic, let's talk about CrowdStrike, CRWD, also IPO last week.
CRWD. And
we've got 7 days of data here, so it's a little bit more. Obviously, you got to look when you just got a little bit of data. I would say, where you had the trade was from June 14th, June 17th. You broke out through that $70, and then you had the run up to the next big psychological level of 80. Funny how these big whole numbers come into play. Couldn't quite get there, got 79, 79. Now it starts to leak. Now you look at it and it had a pretty wild range there on Friday here too. Again, you're at $70, so low of the move 68.30, high of that candle from.
It's actually 56 on the first day.
No, I've already moved on from the first day. I'm talking the low of the move, the low of the recent move. I'm not looking at the first day. We had an up, so the first 6 days ago straight up, it's been going down for 3 days.
I got you.
It started going down. The low of the move's been 68.30. So if you think, okay, well, I'm going to look at a 50% pullback or something, 56 up to $80, call 14 points off. So 7. Not 14 points. It's
68
points. Yeah, so it's 24 points. So if you go that 14 points, take that off. So go 80, 66, maybe. That's where you kind of find for the 50% retracement. Maybe that gets interesting.
It's actually 24, so half of that is 12, and 56 and 12 is 68. Friday's low.
So I did the math wrong.
Yeah,
so 68 coincided with the 50% pullback.
Yep, there it is. That's your number. So I keep an eye on that. How are we trading today? Trading at 70.30. So I'd keep a real close eye on that low. Yep. Whatever way you crack it up, 68's important in it.
I mean, you can do these analysis pretty quick, these technicals, when they only have 7 days of data. There's not a lot to look at. So
no, not at all here. We're getting quite a few stocks in the chat here. I know we got imbalances here at 8:30 and Evan Prattle coming on at 8:35. I don't know the net news on A&D, so just something about the government. I'm just going to look at the chart and just tell you that, remember when that 26 level held up just incredible for a long time? I kind of looking at the $29 area as a sell, a couple lows in the last area. So I like it above 29. Friday's low 28.97. Spencer, what's the low?
Oh,
what's the news?
We're talking about for AMD?
Yes, sir.
Right. I think this is still the news from Friday. Remember, there was like a dozen new companies added to the U.S. blacklist, one of which was AMD's Chinese affiliate.
I don't think there's much news moving it this morning. It's just trading on, and obviously just trading up there. If we look at the other chips here this morning, NVIDIA is trading up slightly here too. You can go Intel. Intel does its own thing. So I don't think there's specific headlines here that are really driving it up this morning. It's only up 20 cents. It's just trying to find its home. There's a big battle between the Bulls and the Bears. Like I said, I thought 30 might hold. It did not, so I cut out. That was a short-term trade. Now you got to look. Joel's right, 29. I mean, the low from Friday, can that hold? I still think, if you're buying a chip, this is best of breed. I still kind of like it. I mean, at 26, you have major, major support, but that's 3 points lower than this. I think you're going to find buyers in here somewhere. So, yeah, if I was buying a chip stock, and obviously I own some of these long-term portfolio, but if I was buying a chip stock for a trade, I'd probably pick on AMD because it's been the best relative strength.
Yeah, it certainly has. Micron is coming out with earnings here.
Just
I
been a
believe,
disaster.
yeah, after the close,
Yeah.
near
I
the
sold
low.
half of it on those rallies into the 40s. I should have sold it all because I basically got over half of my money back. I think I was averaging around $52 or $53 on those shares, and it got up to 43, 44, and I cut out over half of it. I should have sold it all because the stocks obviously come right back down. I mean, this has been the value trap of all value traps, continues to be that. I know there's commentary from Citi this morning. There's also commentary, I believe, from RBC. 32 needs to hold. That's your line in the sand here, but this has just been a disaster for the last year. I've got this one absolutely wrong.
Just lean on the low of the move here. It could go anywhere. That low of the move comes in at 32. Institutions stepped up at 32 and a quarter and 32.14. So I'll give it a shot as long as it holds 32. Speak covered AMD, Micron, and then someone slips in Western Digital here, and I think
disaster too.
Yeah,
I should have sold it all. It got up, and when I bought right when Sean Udall came on, and and he's bullish of stock. So I was like, okay, well, Sean Udall was really hot then. Right now, I was like, I bought West Digital too, just because Sean Udall was bullish stock and he had been really making some great calls. And it went from 36 up to like 50, so up to 20 points. I sold 2/3 of my shares, kept a little piece just for fun. Should have sold it all because I could have rebought that piece right back at the price I originally bought it, which was around 35, 36. It's showing a little life here again. Last couple days, chips have started to rally again. So now it starts to actually get interesting. I think the line in the sand again, 35, 36 bucks. But the chips, and I said this, I believe, on the show last week, kind of showed signs of bottoming there. A few days ago, we had that rip your face off rally kind of out of nowhere. So maybe Micron on pullbacks here, Applied Materials on pullbacks. If you want to look at LRCX, and obviously Nvidia's had a pretty significant rally, but on pullbacks here, I think the short-term bottom is in, but obviously these are still heavy downtrends. So, you got to give them a little bit of a tight leash.
And I'll just wrapping up with the Western Digital here. And I know we talked about this over the last couple of weeks. It's trying to, I guess you could call it an institutional bottom. Shout out to Gil Morales of the Gilmore Report there. The institutions have been stepping up at the $36 area. You had a nice little head fake when you went down to 35.61 and you rallied to close that day at 36.33. So I have no idea where the potential is on the upside. I just think if you finally crack that 36 on a closing basis, you get another leg down in that one. But support is support until it's taken out. Stock we haven't talked about in a long time, BIIB, Biogen, just got wrecked. It's trying here, Dennis, but how many times can you say that again? What do you think? 239.99. Biotech's been a little bit hotter lately. I guess long term,
they never recovered from the Alzheimer's disappointment. They've never recovered. I mean, that's 100 points basically off of that drug, and we knew it. Like we said it when it went up so much on it originally. I was like, it all depends, on what's going forward. But that this premium could come back out of it if they disappoint, and they did. And it's never recovered since then. It's been 3 months. I do own a small piece of my long-term portfolio. Been in it forever. Probably sticking with it because I'm in from I think the $48 or $50 area. But I've sold, way more than I put into it because obviously I've sold probably 3/4 of the position. So I'm keeping the little piece on, but it has not been a great performer in the last couple of years.
No, not at all. I mean, it's getting into the gap area, but what can I say? Yeah, it's going to go fill the gap here at 320.14. A long ways to go. You are at your highest level here since that bad news came out. Let me double check that. No, wrong. I'm wrong. 244.08 was your high on April 5th. So if you're looking for another target on the upside, that's been the highest level since it had the gap down. So I'd use that as major resistance here. One more, then we'll let the Triple D do the imbalances. I know you guys are really throwing them in here at me. Let's go Roku. Taking over the TV world. I have not looked at this chart in over a week. Well, what can you say bad
It's a bit
about
scary.
this? Yeah.
It's a bit scary, though. Under 100, I'd be nervous. Needs to hold 100.
Yeah, it's trading at 102.80, Triple D.
Like, just think about Roku, the move it has had. It started the year at $29, $30. You know, it started the year around $30. It's 102. If you're coming in here now, you're buying everyone else's profits, meaning you're paying way, way, way up for it. It's tripled in 6 months. The stock has tripled. So can there be some profit taking eventually in Roku? Absolutely. You know, do we know where the top is for sure? We don't know, but that candle from Thursday is a bit ugly. So it looks like it was a little bit of a top. You know, it turned around and reversed that day, followed through the next day. So how does it, work at 100? I know you have some lows too. You know, it's kind of tricky at 100 because you got 96.49, 97, 98. And you're still in a pretty good uptrend. So am I getting bearish and shorting it? It's hard to fight that tape, but at the same time, it's had such a move. I feel like, it's just expectations are so high here. If anything happens that disappoints any expectations, this thing could really get hit. So I'm not liking that chart. I think, I just think it's run too far, too fast for me to come in here now.
Let's look. I'm just going to give you two numbers, and they're different numbers than Dennis. Dennis is looking at the 100. To me, I see a pair of lows at 101, 101.01, 101.17. So for me, if I'm playing with a tight leash on the long side, I'm keeping an eye on 101. On the upside, I'm not going to really be that concerned with the all-time high at 108.32. What I will focus on is the all-time closing high at 106.49. If this rally is continue, I want to see it, rally it this week, close over that, and continue.
It's a big week for it.
It's a big week. And you know what you have to think about is like, how are the portfolios going to be, dressed up? Are they going to be dressed up and dressed down for the end of the quarter? You really gotta keep that in mind. If this one, I don't know. Be hard not to ring the register or sell some out of the money calls, but got yourself into it, get yourself out of it. Triple D, anything within little buy imbalances there. I just noticed a little bit of a pop here. We're trading around 29.50.
There's not much. They're very small again. I don't see anything jumping out. I mean, GE 50,000 to sell, Coke 67,000 to sell, JP Morgan 38,000 to sell. Then there's a few buy imbalances, smaller. Visa 23,000 to buy, MasterCard 16,000 to buy. They look small to me, Joel. I don't see anything influential in imbalance land at all.
What about GE here? This guy, Cindy's asking about that. You have cleared 1050.
Yeah, it's.
But you got another pair of highs.
But that was an ugly candle on Friday.
Yeah. I
mean, I've said from a long-term perspective, I obviously own GE for a long time, but until we get Inch or until we get, who's the JP Morgan guy? Tulsa?
Yes, sir.
Until we get one of those guys turning bullish, because those have been the two eternal bears on the stocks. Until we get one of those guys turning bullish, it's hard to get interested. Those guys go bullish, this thing will rally 10% one day. So I don't know if they're going to do that or not. We've had obviously Inch on the show before. He doesn't sound like he's turning anytime soon. So I don't know. Until one of those guys get bullish, I think I'm just going to stay out of GE. I'll day trade it, and from a day trading perspective, you do have the double top, 1070, 1071. So even though you broke out through 1050, you ran into more sellers. And then if you get above that, you're going to run into more sellers at 11. There's so much overhead supply because so many people have been just hit hard in this thing over the course of the last 8 years. I mean, not even the last 2 years has been just awful, from $30 down to 10. I mean, is the story turning around here? Some people speculate it might be, but I'll say guilty until proven innocent.
I did read in Barron's. I think they participated in some leasing of some airplanes, which was a pretty big deal. I don't have all the details of that. Before we bring in our guest, we've got a good point here from Stock Hands, and this is something that I like to keep an eye on when these stocks have these big rallies. Roku, The volume is kind of, I mean, you traded 12 million on June 12th, and you were down to 4.4 million yesterday on a quad witch. So for me, it's like, where are the buyers? If the sellers really come in here now, is there the volume like there was on that 5-point up day? So declining volume, it could just mean the buyers are taking a rest, but that is one indicator I do look at is where are the buyers? The volume a little bit less. So Spencer, what do we got on the docket here for 8:35 guest?
Today's guest, Evan Schnidman, is the founder and CEO of a company called Prattle. They're a text analytics company, and their core product basically reads through the Fed statements and analyzes their sentiment and identifies any keywords. So a great time to talk to Evan in light of last week's meeting. On that note, I will take a quick break right now, and we will bring on today's guest, Evan Schnidman. We'll be right back. All right, welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elconin, and Dennis Dick, joined now by Evan Schnidman, the founder and CEO of Prattle. Evan, how's it going this morning?
It's great. How are you guys doing?
We're doing okay. We're doing okay. It's probably, definitely a good morning to have you on. And we've got the president tweeting this morning about the Federal Reserve and tweeting his unhappiness as we've come to expect here. But talk about, in light of last week's meeting, Evan, I know Prattle parses through the statements and identifies sort of key words. What were the most important words said last week?
Yeah, so, the premise of our system is to look not just at individual words or phrases, but how everything fits together in the context of all prior remarks and how the markets responded to those. So the overarching tone of last week's communication, the FOMC statement, it was just barely below neutral, so just a little bit dovish, which I think kind of coincides nicely with what the Fed was trying to achieve. They were shooting to prep the market that they are willing to cut rates in the future, but no, they're not going to do that immediately. And I think that the headlines from the press conference were many and some, right? So many participants thought there was going to be some need for additional accommodation, right? So that many of the participants making the decision thought that they were likely to cut rates in the near future.
So how does last week sort of change that? So Evan, so how does last week sort of change what we just heard?
Right. How much is successfully pressuring Jay Powell to really jump into a rate cut or series of rate cuts that he doesn't want to do. my perspective on this, and I think that the data bears this out, is that the Fed's not going to do anything that they don't deem appropriate. So to your comment at the top of the show, or top of the interview rather, I don't think that the president's pressure is actually getting to Powell very much, because the legality of removing a Fed chair is tenuous at best. So I think
Hey, Evan, can I hop in for 1 second? Are you on a cell phone? Could you turn up the volume real quick? We're having a little problems hearing you.
Are looking towards, if not cutting rates, other forms of stimulus. You look at the Fed, the ECB, the Bank of Japan, the Bank of England, Reserve Bank of Australia, Reserve Bank of New Zealand. Work your way down the G10 currency central banks, and they're all either actively cutting or actively looking at stimulus measures.
All right, Evan, I think we have got a bad connection somewhere on our end, so I'm gonna let you go, and then I'll try to bring you back here. But I want to give you a chance to for people to actually be able to hear you. So I'll work on some stuff on our end, and I want to try to give you a call back. But Evan, thank you so much, and we will be in touch shortly as I work on this connection. All right. With that said, guys, let's go to, while I work on Evan, Joel, Dennis, let's go to ratings, because we had a number of about half dozen or so interesting ratings. I think the fact that we're out of earnings season, for real, it seems like for real this time, and the analysts now have some time to digest what was said and come out with some changes. So about a dozen or so notable ratings today. Which ones were the most interesting to you?
There's two. Both Spotify and Shopify are getting down here today, are downgraded here today. Spotify is getting downgraded at Evercore. Shopify is getting downgraded at Roth Capital. So interesting. Both Shop and Spot both getting downgraded. Both of these stocks are obviously more plays. Both of these stocks have been very, very hot. So do these two downgrades cool these two stocks off? I mean, if you just look at the Spotify chart, first of all, started the June down at 120. It hit that, kind of blow off candle up at 154 on Thursday. It was kind of a turning point for not just Beyond Meat, but for a lot of little Momo plays there that Thursday, where we opened up high and we kind of started to crater there. So now we're down another $7 here. So it gets interesting. You start thinking about, okay, well, what's the 50% retracement of this most recent remove? You could take it 120 all the way up to 154. So call it 34 points. They take 17 off of 34. That would bring you down to like the 137 range. So, I mean, you start looking at 142, you start thinking maybe you can challenge that today.
I think for this one, I don't want to make it too complicated here. You got that pre-market low at 142.06. You're trading just above that. So for me, I don't care about any other lows. You take out that pre-market low, 142.06. Just not much in there. I mean, you can try and find some different levels, 140.56, but if they're just going to buy this thing up, then it's not going to hit the pre-market low. We're going to come back and rally unchanged. So, and unchanged, or even the bottom of yesterday's range, you find sellers 147.23. That will be your resistance point. And then who downgraded?
Shopify.
Yeah.
This stock. Okay, now, and this is a completely different animal. Spotify has been hot recently. Shopify has been hot all year. Shopify started the year down about $130 to $338 it got to. This is like the Roku chart, same thing. Stock straight up, everybody just piling into it. The stock is basically over doubled this year. Again, if you're coming in now, you're pretty late to the party. And I feel like if I'm just looking at it just on the dailies there, a little bit of the same story, maybe a little bit of a upside capitulation on Thursday. We opened, we kind of ran up a few minutes after the open, but then we kind of closed red. And yesterday was a little quiet candle on Friday, but now you get a downgrade here. A lot of air below. I mean, it's not, it's not like it's a huge company, Roth Capital, but they can move stocks, especially when it's something that, there's a lot of long money piled into. So I think this thing could leak back to 300.
And I'm just looking, 321's the low. You only got $1.25 off that. I think they hit this thing through if they take this through 321, look out, man.
Yeah, there's not much in there.
Yeah. Now let's just
and that's what we looked for, Joel. Like, we look for that on the charts. You look for levels. Okay, if this level holds, you're okay. But if it goes, then, you've got a slippery slope, because you had the big move there going back to Tuesday, when it went from 302 up to 327. So what we always say, what goes up through an area quickly can come down through an area quickly. So it loses 320, you could be at 310 very fast. So
310.
Even lower.
If I was like really holding out on this one for today or the next couple days, I'd be sitting out there at like 304, 305. You had 4 lows between 301.94 and 303.74. I'm not the only one that could look at a chart. So, go above that at 305, because you could have one of those scenarios where you hit 305, you kiss 300, you don't cover, then you're looking at things at 315. So I look at that area when you have 4 consecutive lows in the same area. Actually 5 if you go back to June 12th. 4 out of your 5 lows in that area. If I was short the stock, that's what I'd be looking to bring it in at.
Questions from the chat here. Shopify, they weren't downgraded today.
Yes, it was. Down at Roth Capital. Yeah, it's
at Roth
30
Capital
minutes ago.
Okay.
So Benzinga, you can it's across my desk. It's down. Both are downgraded. Spotify's downgraded. Evercore's, Shopify's downgraded at Roth Capital.
All right. So Roth
30 minutes ago. This one just came out this morning. So this is pretty recent. So it might not even it's wide. It's out there. I could see it on Twitter too. I could see a couple of people have even tweeted on Twitter. So it's getting out there now. But it wasn't long ago. And some of these smaller boutique ones, they don't get out there as fast. So it's out there, but, maybe it hasn't hit your CNBCs and your mainstreams yet. So, that's another concern here, too. You're getting it down $4 only. I would think, a downgrade like this, I would think it'd be down more. So, it gets out there even more. Maybe it goes down more. So I was nervous. So I was buying it here. Very nervous.
I know we had we have some discussions about this in New York. Maybe we should save that discussion.
What's that?
Nah, we'll talk about it later. It was something you made a very interesting comment about this company. And, maybe I don't know if you should say that.
I'll just mention, I think Shopify, you've got to consider one thing. I always say Canada, they don't have any, big startups. They don't have any tech startups. It's a lot of oil and gas, a lot of banks. One thing to consider, the resilient strength and the big strength in Shopify might be Canadian funds, because there's not a lot of nice new tech startups to invest in Canada, and Shopify is one of them. So I think, that gives it a little wind in its sails. If it pulls back significantly, you probably have institutional money in Canada looking to invest in Canada, and this is one of the companies. I mean, we saw this back with Nortel back in the early 2000s, I can remember, when, there was no big technology companies to invest coming out of Canada. There was a few, but, nothing comparatively to the U.S., and then we had Nortel, and everybody in the index, it eventually became 27% of the index. They bought it up so much. That story ended bad, so maybe it's the poor comparison here, but just saying there's not a lot of, new tech startups here to invest in Canada. And, so you get one from Canada, and it can obviously help it there from having Canadian money in it. So that's one consideration. I think there will find buyers on pullbacks here, is what I'm saying.
All right. What are we else? Are we done with our upgrades? Maybe take. Or,
no.
Downgrades. Sorry.
We have some more as far as downgrades. Let me see here. Occidental OXY caught a downgrade this morning to neutral from Morgan Stanley. Same with Oasis.
I mean, that's crickets. OXY is doing its own thing now. It's not.
How's that chart looking?
It got some life when you had some institutional buy, or you had some insider buying there, which was disclosed there a couple of weeks ago. It started to show a little bit of life there, but again, oil showed a little bit of life here too. We know this just moves along with oil to a certain extent, but it's always been getting hit heavier because of the big premium that they paid. They've never liked it since they paid that big premium for APC. So, it's been out of favor ever since, and it still remains kind of out of favor for that reason.
Yeah, good. Some big boys buying it.
Sunoco downgrade at Goldman Sachs to sell SON. Raytheon, actually, Sunoco is one of the bigger ones of the morning. Though not a super liquid stock, or not one of those stocks we talk about frequently on the show. Raytheon downgraded Buckingham to neutral. That's it as far as the downgrades. CarMax also downgraded Buckingham to neutral. And as far as upgrades are concerned, Duncan DNKN upgraded to outperform at Wedbush. That jumps out to me.
Yeah, that's a big one. And the stock's been in an uptrend here. Consolidation period for 4 or 5 days. I kind of like this chart. Because what I always say is you get a move, then you sometimes get a couple week consolidation of that move, and what often happens is a resumption of the previous trend. Previous trend took you from 72 to 82, Can this upgrade kickstart you to take you out of all those highs around 81.50? I think it might. I think it's going to challenge at this point. It's 80.75 bid, 81.30 offer. So you've got, maybe one person saying it's not going to take it out, but I don't know. I mean, I kind of like this chart, and I think this could be a catalyst to maybe kickstart you to new highs on DNKN.
You definitely got someone that wants out of a piece around 81. Maybe they're not picking 81 exactly, but I see 1, 2, 3, 4, 5, 6, 7 highs since June 11th. And you could just call it 81 if you don't want to be picky. So it's just kind of some kind of algo that's willing to sell a little bit below and a little bit above. And until they're cleaned up, which could be today, obviously, 81.40 is your all-time high in Dunkin' Donuts, and your all-time closing high comes in at 80.73. So let's see if they can mop up that seller at 81 and take this one to 82 and beyond.
Deere also catching an upgrade this morning from Jefferies to buy. Jefferies also upgrading AGCO to buy. So Deere and AGCO upgraded this morning to buy at Jefferies.
Late to the party here. Deere has rallied. Where were you a month ago when this thing was $135? It's now up here near the highs. We're back. All kinds of resistance up at 170. I'm a fader of the Jefferies. I think I would be a fader of the Jefferies upgrade here. Gets anywhere near 170. I think it's actually a good short opportunity. It just comes so far, so fast. Look back to 2018. You had all those tops, 171, 175, now 170. Now you get this wicked rally in the last month where you get all the losses back. I mean, all kinds of resistance up there at 170. I almost got to even go look at the book. I know we're $2 or $3 away from there, still $4 away from there. But you think about how far we've come here. I think the upside here is 170, and the downside is significantly more. 74,000 shares in the book at 170 there too. That's significant for a stock like Deere. I think they're too late to the party.
I'm actually going to step ahead of you, Dennis, with a little bit of resistance. We are trading $1.61 and 165.99, but you just need to go back to the late April and early May. You had 1, 2, 3, 4 high, 1, 2, 3, 4, 5 highs. Yep, 6 highs, right at that 167 area. So forget about 170. I know it'll be maybe if it's a big upgrade, it's really going to roll. But man, you had sellers 4 or 5 days in a row at 167. Maybe they fall back to 135. But I would keep an eye. If you don't follow through to that pre-market high, boom, crash through 186 or 167. I expect a little pullback here in this one. Not if you're buying this one off the open, you want immediate gratification and right over 167.
I mean, as a day trade, maybe you can keep moving, but we're just saying from a swing trading perspective, your risk reward doesn't set up well to go long here, in my opinion.
We also had an upgrade from Fortinet FTNT to overweight at JP Morgan.
This one's a hard one. This is it's in a downtrend. I'd say as long as you're below 80, bears are still in control. So even though it gets upgraded here this morning, it looks like it's bid up at 77.77, so it's gonna trade up here this morning a couple bucks. But you got overhead supply and you got some resistance. Old support becomes new resistance. I'd say you still got resistance up near 80.
Yeah, and you have a daily high here at 80.73, a little gap in that area as well, up to 81.53. So nice kickstart. I don't know. Is there any volume on this thing? I know you don't need it as long as there's a bid out here, but boy, oh boy, you had some trades on Friday over a couple thousand shares. But here are your prints this morning. 12 shares, 3 shares is 75 shares. If that doesn't mean that it cannot go higher, but just your 2-day high, even you haven't taken out it. You have taken out 78.32. So you are from a price standpoint. Next target for me would be 79.30. That was the May 28th high.
And then UTX upgraded this morning at Cowen to outperform price target, raised from 135 to 150.
It looks like the same chart we just looked at. You've been beat up. You haven't got all the May losses back for this one yet, so it's been a little bit of an underperformer as of late. You got overhead, all kinds of resistance up at 140. It's a long ways away from here. But, if you're looking at a long-term perspective, it's kind of in the middle of nowhere.
It's still haven't taken out Friday's high. So let's take care of that. 130.86. Who did they take over again? I can't remember. Was it Raytheon?
Yep, that was a merger.
Merger?
That was
Yeah.
a merger. Yeah.
Yeah.
It was a merger that got sold hard. So anybody
Yeah.
who bought those stocks that day is still significantly underwater there too. So you got to think, okay, there's overhead supply from the people who were losers on buying the day of that deal. You only get near 133, 134, 135, especially on Raytheon too, RTN, get back up to 189, 190. You got people who are looking to get their money back. So it's not clear sailing. I like buying stocks when there's more clear sail, like there's nothing in there. I just see all kinds of overhead supply coming in there. But then if it pulls back, you got some support down there too. That's why I say I don't see a setup here. It's kind of just in the middle of nowhere.
Yeah, and also if you look at the decline that you had from that day, I remember it was trading up. Let's just call it 136 down to 122, 14-point move. Add 7 to that, so you're getting it back. I like to really state, if this is a for real rally here, state above 130 here. We're only trading 20 cents above that. Triple D caught an upgrade this
It looks like
morning.
B. Riley upgrading.
Yeah, what do you think? Oh, well,
I'm long in my long-term account, speculative play. It's been a disaster. I'm in from like that whole support area that I thought was going to hold. They came out with the disappointing earnings. I held into earnings, and I obviously shouldn't have because it disappointed and the stock got hit. I mean, it gets back up near 10 or 11, and you got people like me wanting their money back.
Yeah, 1050 was the area which it gapped down from. You are sneaking into the 9 handle. And
it's
I like to
upgraded.
see it hold 9. It's a hold 9.
Yeah.
Best case scenario today over the next couple of days would be 1050 to fill that gap area.
That's a long ways to go.
Yeah, a lot of stock.
Upgrade helps.
Yep, it does. It does.
908 bid, so it's trading up 1.3%. There's not much in here, so I don't think I'd be shorting it. It's wide open, and it was a nice candle on Friday, so it's a good time to upgrade it. It was good timing, but it gets back up near 11. You have people like me wanting their money back, so I don't know. You take that for what it's worth.
895 if you want to try and buy it at the close on Friday. That was the close. Unfortunately, the low for Friday. Real good support. Like if they turn around and really decide to fade this here, 838, 835 were your lows from the last 2 sessions.
Hey guys,
symbols coming from the chat. I guess we're just doing ticker. It's Ticker Monday.
Well, yeah, we can. But before we'll get to a couple. I just want to ask you guys before we go, though. What did you think of the trading summit?
Awesome. I mean, even that, like the trading room with Jeremy, like right off the hop, we had, we did the pre-market prep show, but then after that, with Jeremy, we had Anne Marie and Todd Gordon trading live. It was awesome. Like just to watch them, showing what they're doing, showing their train of thought, learning so much from 3 seasoned traders who make money on a consistent basis. I think it was really, really well received. Then we had a couple presentations. Then we went to live training again in the afternoon. But I thought, that whole part of it was excellent. I obviously can't comment too much on the other side because I was very involved in that room in the trading lounge. I did sneak over to see, the main stage there a couple times, and obviously had my presentation in the afternoon on the main stage. I heard it went well over there too, but I was very, very impressed with the Benzinga crew there. Great job, guys. Very impressed with the event.
Yeah, Jeremy went 17 for 17, I believe. When he's been on the show, he's made money. He gave us a great setup in Schlumberger, which
got out too soon.
Yeah, he got out too soon. If you ever haven't seen Anne Marie Band in person, she is just a dynamo. These guys, Todd, well-spoken person, very talkative, and Jeremy, and then all of a sudden Anne Marie pops up and is just like, I'm short the S&Ps. And she explained exactly why she was, where her stop was, where her targets. So it was just great. In the afternoon, it was a little bit tougher for Kenny, Jeremy, and Christian Fromhertz because really the fireworks didn't start until like really at the end when we were kind of wrapping things up.
Well, you're getting late, and I think some people you're getting a little bit more tired at that point in time too, from everybody who's listening too. But it was good too. I mean, they did a great job. Kenny's always good. He was talking the VWAP, and really breaking it down, and he basically just trades off of the VWAP, and he was really breaking that down And obviously, Christian Fromhurst did a fantastic job there too. And then we had Jeremy again, in the afternoon as well. So I thought everybody that we had did a really good job.
Well, I'm a little biased here, but I think that by far the two best presentations, one done in the trading lounge by none other than Triple D. And then, Dennis, I want to tell you, and I don't know if I told you this when we went out to dinner with Jeremy, but when you were in the big room there and you were giving that presentation, people were getting hand cramps.
I'm trying to write down. I was talking too fast.
Write down what you were saying, and then I don't know. We probably should have said no video cameras because people were videotaping the presentation as well, and I believe that's a copyright infringement.
That's all good.
And
well, Dennis, there was also someone when you were presenting in the trading lounge. He was taking pictures. At first he was taking notes, and then I think he gave up. And he was taking pictures of all your slides.
You guys didn't give me any time. I had to speak twice as fast. You guys listen to me every day, the people who are listening out there on the pre-market. I talk fast. Well, then when you give me 8 minutes and you give me 20 minutes, I got an hour material both ones. I'm talking really fast. I said on the 8-minute one, I was like, this could be an 8-minute crash course in high frequency trading. So let's go. And I just pounded out a bunch of HFT strategies, what they're doing, and then I told you how to adjust to it in the trading environment and your execution tactics. I basically was telling you what you need to know as a trader who is a non-HFT trader to compete in a world that is dominated by high frequency trading. So,
yeah, that was a great 20-minute presentation.
Yeah, well, thank you.
In 8 minutes.
In 8 minutes. Yeah, I know.
Question from the chat: will the event footage be available online? I am not sure, but I will find out and answer to you and get back to you tomorrow. It was a great meeting. I met about a dozen people who listened to the show, came up to me throughout the day. It
was awesome.
And it was great to meet all of you who were there.
Let's thank everybody who came.
Yes.
Thank all of you. Thank everyone for coming out because it was a tremendous event. It couldn't happen without you, obviously, without the attendees. So thank you so much.
And they were so good. I mean, the questions that people were asking, to everything, everybody was just, I thought the event was excellent. I can't even think of anything that really didn't go well.
I just want to say also thank you to Leonardo the Trader. We got some coffee from him.
That was awesome.
Yeah. And I ground it up last night and I tried it. So Leonardo, I'm having your coffee today. It was absolutely excellent. So that was fine. So all right, Spencer, we're running over here.
It's okay. We'll get Evan Schnidman on later in the week, but that'll be it for today's show. Thanks to everyone who joined us. Thanks to in our chat rooms, both on YouTube and on premarket.benzinga.com. You missed any part of our show, catch our podcast. Please remember, all the information from our show is for informational purposes only, not meant to be investing advice. Have a good rest of your day, everyone. We will see you on Tuesday.